Hello and welcome to this presentation on VAT and Customs by Ecovis Wingrave Yeats for Enterprise Ireland. Ecovis is a full service firm of accountants, auditors, tax advisors, and within that we have a specialism, a VAT specialism, which my colleague Andrew, who's also presenting today, doing the lion's share of the presenting, heads up. So we go back quite a way with Enterprise Ireland, probably up to about almost a decade, working with their clients to help them navigate UK market entry. So businesses of all shapes and sizes, as they look to enter the UK market, what do they need to know from an accounting, audit, tax, regulatory perspective? And obviously VAT and Customs plays a huge part in that. Our contact details are at the end of this, and if you have any questions, please get in contact directly or go through your Enterprise Ireland account manager, who will put you in touch with the correct person at Ecovis. So I'm going to skip on to the next slide, and hopefully I can get it to work. You'll see our agenda today. So we're going to cover in very high level. We're going to cover all of these topics here. So an overview of the UK VAT legislation and what you need to know around registering for VAT and when you do, perhaps don't need to register for VAT. We'll talk a bit about the places of supply for goods and services, and then importing goods into the UK and some of the differences that Northern Ireland throws up. So the nuance that having Northern Ireland in the equation presents. So without further ado, it's over to Andrew Stanton, who's our VAT Director at Ecovis, and we're going to talk about UK VAT legislation.
Yep. Hello, everybody. Thank you, Ben. And from the outset, as Ben said, he has a very high level. A lot of these topics could be sort of hour-long webinars in their own right, and we're trying to rattle through things in about 15-20 minutes. So primary VAT legislation in the UK is the Value Added Taxes Act of 1994. That assumes, and that's the way it's been written, is it assumes everything is taxable at the standard rate, which is currently 20%, unless specified elsewhere. Elsewhere, it's specified it could be 5%, which is the reduced rate, or 0 rate, which is another reduced rate as well, technically. Those are deemed taxable rates of VAT. We also have exempt and outside the scope, and the difference between those are that it can be potentially taxable in another country, even though there's no UK VAT to be applied. Going to mention Brexit very quickly. The latest EU-UK trade deal is actually no more than an agreement to negotiate things going forward. It actually hasn't changed anything with the Windsor Protocols that came in. And then just to talk about Trump's tariffs, that again, it's a headline, it's not changing anything. So not ignore Trump, but it's not, the headline isn't there behind the story. So if you can just quickly go on to the next slide.
Our official view is on Trump, but yeah, better, the less said the better maybe, but yeah, on to VAT registration.
Indeed. So the VAT threshold in the UK is a £90,000 turnover per annum. Now you are registrable in the UK if you have turnover in the UK exceeding that threshold, or you expect to exceed that threshold in the next 30 days. Now you can register with a threshold below 90,000 if you want to, but there is one thing that you need to determine is your place of residence. If your place of residence is in the UK, the £90,000 applies. If your place of residence is not the UK, then you're deemed a non-established taxable person, which is the NETP, and the threshold there is actually 0. And so the first penny you make in the UK, you are registrable from day one. You can't look beyond 30 days there. So if you know in 35 days you're going to commence trading in the UK, you can't register for VAT until you're within that 30-day window, which sounds all well and good, except HMRC are currently taking 40 days to register businesses for VAT. Now that registration is if it's a standard registration with no complexities, and unfortunately non-established taxable persons is one of those complexities. HMRC have recently employed lots of staff to try and bring that waiting time down from 40 days. The unfortunate we have now is they are all in training, and you've got inexperienced decision makers making the out of the ordinary take slightly longer, and unfortunately non-established taxable persons is one of those. So that timeline might extend beyond that 40 days. So
it's
again,
worth probably noting that we're recording this in the middle of June 2025. So that's the current situation. That is subject to change, but realistically, if you're an Irish business looking to enter the UK market, considering the VAT position early is advised, because it can take a little while to get registered, and it always has taken longer for overseas businesses. So yeah, do allow some time.
So in determining where the place of supply is, and if this is stating the obvious, I apologise. If the place of supply is the UK, you're registrable in the UK, and UK VAT will be due. If the place of supply is not the UK, UK VAT may not be due, but there might be liable to VAT in another country other than the UK. The determining factor of whether the place of supply is the UK or not is whether you have the human and technical resources in the UK to fulfill your contract here in the UK. Now, those human and technical resources can't be a temporary installation of those resources. They have to be a permanent setup, and HMRC have determined temporary is less than 2 years. So if you don't have the human and technological resources here, you would not have an establishment in the UK. You would be deemed a non-established taxable person, and therefore the 90,000 threshold will not apply to you. So having determined that your place of supply is the UK, you then have to determine whether it's a supply of goods or whether it's a supply of services, because the VAT rules are different between the two. Taking services first, the rules are different between a business-to-business transaction, the B2B, or business to consumer or customer transaction, which is the B2C. There are exceptions to these rules, by the way, and also bear in mind HMRC don't always get it right. I'm sure a number of you were involved in the G-Cloud 14 fun and games that was caused by HMRC deciding to change their minds. So B2B, the place of supply is generally where your customer is. So if you're VAT registered in Ireland and you have a UK customer who's also VAT registered here, your place of supply is over here. It's where your customer is. So from Ireland, you would zero rate your supply, and it would be up to your UK customer to self-charge. So it's a reverse charge, but by another name, that VAT in the UK, and therefore recover it in the UK. But you, as an Irish B2B supplier, do not have to account for VAT in the UK or charge UK VAT. B2C, the place of supply is where the supplier is. So if you're in Ireland and you're selling to a UK non-VAT registered entity, then the place of supply is Ireland. You would charge Irish VAT to your UK customer. One major overriding in all of that relating services is if it is relating to land, or it is a land related service, the place of supply is where the land is situated. So although you might have a B2B supply going on, if the land is in the UK, chances are you'd have to register for VAT in the UK and charge UK VAT. Place of supply for goods is a lot simpler, thankfully. It's wherever the goods are when the title passes to your customer. If they're in the UK, UK VAT will need to be charged. You will need to register for VAT over here. Again, there are exceptions, but if the goods are not in the UK, then you will not need to charge UK VAT, but it might be subject to VAT in Ireland. On to the next slide, Ben, please. So importing stuff into the UK, and again, this is a whole day-long webinar in its own right. If you import goods into the UK, we are outside the EU. We now have our own UK rules and regulations, and VAT, and in certain circumstances, import duty will be payable. That VAT could be deferred and recovered using the postponed VAT accounting scheme. The duty can be deferred, but it will not be recovered. Importing goods, temporarily importing goods into the UK, it is possible to get a import processing relief if the goods are only going to be here, again, a 2 years threshold. But it should also be possible to get outward processing relief in Ireland to fully mitigate the import duty that's maybe become payable. I should state at this point, if you employ a reputable shipping agent, that is possibly the way to go if you're not familiar with the UK regulations, because if it goes wrong, it goes wrong horribly very, very quickly. And the first thing that you'd have to do to identify is the commodity code, and that's the tariff commodity code in old EU speak, the Intrastat classification nomenclature. So once you've identified what that commodity code is, you can go onto the UK tariff, which is different to the EU tariff, onto the UK tariff to determine whether import duty or excise duty is liable on the importation. The place of origin will also potentially determine that. So you might be having goods, importing them from Ireland, yes, but if the place of origin is outside the EU, there might be additional taxes to be paid, and it's ideal to check that on the day of dispatch, because it has been known to change, especially in the current economic climate. Incoterms are important. Incoterms are the international set of terms that determine who pays what tax and where. And if you say are treating something as X works, and your customer is treating it as delivered duty paid, DDP, then you will get into an argument with your customer about who's liable for what, and it could involve the goods being held at the port of entry into the UK. The EORI number is exactly the same as the Irish EORI number. Those of you who have been importing into the UK for a period of time, Chief, the old HMRC system has gone, it's no more. They now have the customs declaration system. It asks for all the same information as what the Chief system asked for, but it needs to be added in a different format. It's different boxes, but ultimately it's the same set of information that's needed. I mentioned very, very quickly postponed VAT accounting. It mitigates the import VAT that is due, allows it to be deferred to a UK VAT return, and that gets then paid and recovered on the same UK VAT return, therefore effectively giving you cash flow advantage for that VAT. The duty deferment, again, defers the import duty from the time of entry into the UK to a monthly payment up to an agreed deferment level, which is agreed with HMRC in advance. Provided you are not breaching your deferment level and you have ticked the postponed VAT accounting box on the customs declaration system, your goods should not be blocked coming into the UK from Ireland. And then onwards. There are different rules for Northern Ireland, and I must also say this is still changing and evolving as well. Northern Ireland is still part of the EU for VAT and customs purposes. What that does mean is if you're transferring goods to Northern Ireland from the Southern Ireland, then you will have to do Intrastat because it's the inter-cross-border supply. If you're then moving goods from Northern Ireland into Great Britain's mainland, there will be additional admin placed upon the Northern Ireland Britain leg. For example, you might have to give a goods vehicle movement notice, and there are additional customs forms there If it's a temporary admission, you need some ATA forms. You will need some TIR carnet movement forms as well. Ultimately, you just need to prove the country of origin. If it's a good that is originating in Ireland, moving into Northern Ireland, it's an EU transaction. If that is then moving from Northern Ireland into mainland UK and no further, no importation taxes should be applied, but you have to prove that country of origin. If you get it wrong, then there could be additional taxes charged to yourselves that you couldn't actually then recover because you've got the paperwork wrong, and HMRC will say, sorry, you've got the paperwork wrong, the goods are here, we're not going to go back and change the history. And so we've rattled on for about 10-15 minutes, Ben. I think I've done. If you've got anything else to add.
Thank you very much, Andrew. No, I guess just to say that was a real whistle-stop tour of VAT and Customs. As Andrew said, you could probably take any one of those slides and talk for half a day to a day in some depth. I think VAT is often assumed to be a fairly simple tax. It's by far and away the most complicated tax in the UK. So it is worth seeking some advice. If you do need anything, please do get in touch. I'm Ben Aspinall. Andrew's been talking at you for the last quarter of an hour. So yeah, we're here to help. Do speak to your Enterprise Ireland account manager, and they'll put you in touch with us as well. And yeah, thank you for listening.
Thank you.